Hello and welcome to the Financial Puzzle Playbook with your host, Jim Sumpter. I'm RJ Malik, producer of this podcast. So we're continuing the discussion about the 6 puzzle pieces on this podcast. Jim, what part of the puzzle will we be talking about, or will there be multiple pieces of the puzzle that you're discussing on this podcast?
Well, so RJ, today, first of all, great to see you. And today we're going to talk about 2. We're gonna tie a couple in, and you know these pieces sort of go hand in hand a lot of times, and it's going to be the insurance puzzle piece tied in with the estate puzzle piece.
Okay.
And you know what I'm going to do today, I'm going to talk about really kind of 3 big topics: the importance of having your documents in place before something happens. The second will be making sure that beneficiaries are set and updated the way that you want them to be. And I'm emphasizing some words here because that's going to be important on a couple of these stories. And then the last topic is going to be, it's not just about a will. And so I've got a few real stories here. You know, the first one this was actually early in my career. When I became a certified financial planner well over 20 years ago, I had this couple that I was working with, and they were about to sell a piece of property that was going to be very, very profitable to them. And the tax implication on the sale of this property was going to be 6 figures. And so, you know, their concern was, is there a way to do something to avoid that or prevent it or mitigate it? You know, what can we do? So we asked a lot of questions, went through a series, and one of the things that we determined is that they were very charitably inclined. And when a client is charitably inclined, they do have more options on capital gains mitigation. So what we did, to make a long story short, is we tied in a charitable trust with a life insurance policy. So those are 2 very different things because you have to be insurable. You have to have an insurable interest, and then you have to have a trust document set up in place. So there was a myriad of steps that had to go in a particular order. What was interesting, the way we even got this client is an auction company that was going to auction off this land reached out, and I knew the auctioneer, and he said, "Hey, so I've got this client and started going through the story. We all met, and that's how it happened." So long story short, we set up a charitable trust. We had to move the property into the trust. So the trust now owned the property. So the trust was actually going to sell the property, not the individuals. But then, you know, if you move property into a trust and you make the sale, well, then the charity gets the proceeds. Well, the client didn't want to totally lose, you know, all their money. So what we did is we set up an income stream coming from the trust that if something were to happen to one of them, then the insurable interest was the client's. And so the client would get paid through the life insurance policy if something were to happen. Well, if something doesn't happen, then you take the income stream from the trust and you let that income stream pay for the premium on the insurance policy. So I've generalized it very much, but basically you have a trust in place, you have an insurance policy in place, and there was an order that we had to do all of those. Long story short, this was a several-month process. We get everything put into place, and it's the day of the auction. I think it was a Friday, maybe. So we go down to the auction. There's, you know, my friend, the auctioneer, my client, so on and so forth, and so we go through the auction. Well, the auction, the property actually brings more money than everyone expected. So everybody's, you know, excited and so on and so forth. What we realize is that. So we had Mr. and Mrs. Well, Mr. shows up for the auction because he's gung-ho. He wants to be there, you know, before everyone else is, and he was. His wife had not come yet, but he knew that she was taking care of some things at the house and would be there. And he made the comment. He said, you know, she really wasn't excited about this anyway, so she may not even show up.
Right.
She may show up at the restaurant that we go to when we celebrate. And so we all go to, we leave the auction, we all go to the restaurant, we're kind of celebrating. Well, he gets a phone call, and it's one of his kids. So here's what happened. On the way to the auction, the wife was in a car accident and passed away.
Oh.
So here's what happened. everything that we had put into place within a matter of a handful of hours comes to fruition.
Wow.
And I mean, we were just all kind of sitting there, kind of like you and I are right now.
Right. Stunned. Yes.
Stunned that, oh my gosh, this happened. And here's what it taught me as a very young planner is you plan for a reason.
Right.
And when you plan that these things could happen.
Right.
But a lot of times you don't really expect it right away.
So, Jim, if you don't mind me asking, what would have happened if they didn't have that all set up?
So if they didn't have it all set up, what would have happened is they would have auctioned the property, they would have owned it, and they would have had a 6-figure capital gain. They would have had the balance of the proceeds in their name, and his wife would have passed away, and they would have had this money that he would have had for the remainder of his life, but he would have had this 6-figure capital gain. That's really the biggest change that would have happened, because
He would have had a big tax bill then.
he would have had a big tax bill. Yeah, so 6 figures. And so really what did happen in this case is because the trust owned the property, the trust sold the property. So the trust, because it was a charitable trust, did not have to pay any capital gain. Okay. The charity got the proceeds of the sale of the land, but it also paid the premium for the insurance policy, which we'd already made the first premium payment. Now there's an insurance policy that pays my client because his wife was the insurable interest and he was the beneficiary, or, you know, they had it kind of vice versa.
Right.
They had one on each of them basically. And so he now has this amount of money that would equal the sale of the proceeds, but he just didn't have the tax bill.
Right.
And so that's what actually did happen. And I mentioned that the auction was on a Friday. What's interesting is we got everything put in place on Wednesday. So when I talk about making sure all of the documents are in place before that happens, here's the other thing that could have happened. Let's say we had the documents in place and the property had been moved into the trust, but the insurance premium had not been paid or posted. You would have had this charity receiving the benefit. There would have been no tax bill, but the client would have had no money because the insurance policy would not have paid out.
Oh, wow.
So this was a situation where I will tell you, it taught me as a young planner, make sure your T's are crossed and your I's are dotted every single step of the way. So that's story number one. Okay, let's talk about story number two. Story number two is actually a lot more recent because this has happened over the last year. So I had this client that I had worked with 25 years. Okay. She was a widow. I'd worked with her. She had no children. And we had done, you know, investment planning and estate planning and tax planning and, you know, all along the way. She actually lived in another state. She moved back to Birmingham, and I worked with her when she lived in Florida. And then she moved back to Birmingham probably, I don't know, 10, 12 years ago, something like that. And anyway, long story short, she passes away. And we had all of her beneficiaries in place. Now, what's interesting is over the course of our 25 years of working together, she had actually changed the beneficiaries a couple of times because she had two brothers and she wanted to initially, you know, money would go to her brothers because, again, she was a widow with no children. Then as her brothers got older, as her brothers became more, you know, sustainable on their own, things like that, and she really realized, you know, they don't need the money. She changed some beneficiaries to nieces and nephews and things like that. What's interesting in this case is, so I'm in Alabama, my client was in Alabama, and one of the beneficiaries was in Alabama. Then we had multiple beneficiaries across multiple states, and there was even one in another country. And so still a U.S. citizen, but lived in another country. So that brings in a new set of circumstances along the way. So I've literally been working with this family for almost a year on making sure that all of the pieces get put in place. And there was a question along the way from one of the nephews. Well, this isn't exactly what Aunt so and so would have wanted, and I said, well, actually, it is, because we had those conversations, and he said, well, that doesn't seem right, and I'm like, well, a beneficiary designation trumps everything. It doesn't matter what a will says, what hearsay is, a beneficiary designation trumps it. And so that's been an interesting case, because a lot of times, you can have Thanksgiving conversation, or, well, so-and-so said, or my mom said that this would be that. And, that's conversation, but that's not really what happens. There has to be that beneficiary designation. The other thing that I want to mention is, and this isn't in this particular case, but I see this a good bit, is there's a term out there called per stirpes. Okay.
Okay.
So per stirpes means in the lineage. Okay. Staying in the lineage. Now, in the insurance world, in the legal world, in the investment world, if someone is legally adopted, they are considered to be in the lineage. If they are not legally adopted, they are not considered to be in the lineage. So I'll interject this story. So, most people know that, and I've shared, a story about my family. So I have two sisters. I have one that is my birth sister, and I have one that is my stepsister, but my parents got married when I was 12. My mom had passed away when I was young, so it was me and my sister and my dad. My dad remarries, and in comes my sister Jennifer. And so she's technically and legally my stepsister, okay? Now, I'm going to dovetail this kind of into my third story, but there was a period of time where I, as an advisor, I was working with my parents, and I set up my parents' beneficiary designations, each other, per stirpes. Then I started looking at that, and what I realized is, wow, I just disinherited myself from part of the inheritance of something that happened, and then I just disinherited my stepsister from part of the inheritance if something had happened, because per stirpes in that sense meant that if my dad had passed and my mom had passed at the same time, his money would have gone to me and my birth sister. If the opposite had happened and it had been my mom and my dad, her money would have gone to my stepsister. And a lot of times we don't think about this type of thing,
Right.
The other thing that comes up from time to time is, well, I want to make sure that money goes to the grandchildren. And so you have mom and dad, and they have, the beneficiary designations, and they want money to go to, we'll use my example of the three kids. And, but I have children. My sister Lisa has children. My sister Jennifer doesn't have children. So if my parents had wanted money to stay in the lineage, then what happened in that case, if money had gone to my sister Jennifer, well, she doesn't have children. Well, if something happens to her, then where does that money go? Well, now it goes back through her will. But if she doesn't have a will, then the state comes in and says, okay, well, then, this is who gets it. Well, it goes to her next of kin. Well, her technical next of kin, because her mom would have been passed, she was not legally adopted, it would have been her husband in that sense, because she has no children. So it's one of these things that, and I've touched on beneficiary designations and the importance of it and things from time to time, but it's one of those things where it really does become real when things like this happen, that we plan for, but we don't expect. And that's one of the biggest, points that I want to get across here is we plan for things, but we don't really expect them to happen. But if they did, then this is what we want to happen. But we don't really expect that. And I think as we're talking to clients, I see that so much.
Hi everyone, I'm Cassidy, the second C in CMC Financial. So Dad sometimes gets on a roll with this podcast and might forget to remind you about a few things. 1, don't forget to like and share this podcast and leave a review. 2, follow CMC Financial on all of the socials, Facebook, Instagram, and LinkedIn. And 3, go check out the website at cmcfp.com. Okay, back to my dad. He's probably still talking.
It can get complicated because what you were just talking about, my family went through that. My mom and my dad, when my dad was still around, were setting up their will. And my mom, there's 4 of us, so they were very simple. It's, when they pass, it's split between the 4 of us.
Mm-hmm.
And my mom got into her head that she wanted the grandkids taken care of too. So she wanted to have them, included. But my wife and I don't have kids. So my mom was like, well, then maybe I should include my wife. And finally, the person who was handling this said, stop. It's getting too complicated. Just keep it to your kids and then let them take care of it from there.
Right.
So my point, I guess, is, isn't it better to just keep it simple?
I think a lot of times it is. I've probably worked on, over 100 estates throughout my career, and we've had this conversation multiple times. And I think sometimes we do try to complicate it too much because we put in too many what ifs.
In my mother's case, she wanted to be fair.
Oh, sure, absolutely.
And I think most people are like that. We want to be fair to our family members.
Mm-hmm. But, RJ, here's something that happens is a lot of times we want to be fair, but we're not exactly sure. So I need to think about it. And what happens is and I talked about this when we had Brendan on the show, and we talked about procrastination. Because what happens, remember my first point, okay? We want to make sure that the documents are in place before something happens. Because here's the other thing, like in your mom's case, and I don't know her situation, but let's say that she's thinking about this and trying to figure out, okay, what's fair? Well, let me talk to them, and let me wait till the holiday, and we'll have this family meeting and all this kind of stuff. Well, then, mom could still be around, but mom could all of a sudden have capacity issues. And if she has capacity issues, then legally she can't make any changes.
Right.
And so that becomes an important part of this whole plan. And so it's an interesting topic because it's something that, like I said, we think about a lot and we plan for a lot, but we don't really expect it to ever happen when we start doing all these what ifs.
Right. But the point you just made is actually happening to me. My mom, we had to take her car away from her because she slammed into a parked car. She's 87 and she's noticeably declining. Well, the 4 of us have noticed it. So, in fact, my sister is now on her bank account. Okay. This way, if something happens to her, we can get into her account and take care of her. Right. So, things pop up. These are things that I 20 years ago, I would never think of.
Right. I will caution you one thing. You mentioned there's 4 of you and your sister's on her bank account. If something happens to your mom, by ownership, your sister now owns that money.
Correct.
Depending on how much money's in it, you just want to make sure that there's not a gifting issue down the road because she can only gift so much money. Now, if your mom keeps a minimal amount in the checking account, that's fine.
Yeah, that's basically what she does. She's on a strict budget, and I trust my sister. the four of us have talked extensively.
Right.
We all know what is going to happen. If something happens to my mother, we know what's going to happen. And probably the next time I visit my mom, I will put my name on the bank account too. So there's two of us.
I understand. I understand completely.
But again, communication is huge. And we were fortunate enough to see our parents with their siblings, aunts and uncles, go through some just nasty interaction with their siblings over not a lot of money. So
yeah.
we've learned from that. Unfortunately, we've learned from that. So we do. I have to say we do a really good job of communicating, and everyone's on the same page.
Well, the estate that I mentioned that I'm kind of working through right now, I mean, it's a lot of money until you divide it up 5 ways, and then it was not as much as maybe was originally thought. And everyone's questioning what the poor aunt's intent was, because they had a conversation. Well, that's not what I understood, but this is what the document says. And then I'm going back as the advisor going, yes, but these were the conversations that I had over the course of 25 plus years, And so it's been a very interesting case. Yeah.
Because emotions get involved, and
Oh,
people
absolutely.
get emotional about it.
Yeah.
And that's I'm sure you've had to put on the striped shirt and the whistle and keep things sane.
Yeah. Trying to. And then, and of course, multiple states and countries and all it, you're doing a lot by email. So, so then everything's in writing, and so you're very careful with what you say and who you say it to.
And email, sometimes you think you're sending something in an email, makes sense, and someone then sees the email and they interpret it a different way.
You could send one email to 5 different people and have 5 different interpretations.
Yes, absolutely.
And then my favorite is, well, the tone of your email. Well, how do you know what the tone was?
Right, and you're sitting there, tone. I just wrote this out. Yes.
Yeah, exactly. But when it comes to this topic, it's a big deal. It's a really big deal, and it's families get involved, and I'm going to kind of dovetail into my last story here. And this one kind of became personal, and you'll understand what I mean in a moment. So this was actually about my family, and so I was very, very close to my grandmother. I've mentioned my dad, probably 100 times on here, very close to my dad. We had done a lot of estate planning in our family. And we had, this is where I want to bring the point about it's more than just a will, okay? Because remember when we've talked that, it doesn't matter what the will says, because ownership and beneficiary or transfer on death designations trump a will. They will go into place before a will happens. Also, you want to make sure that this whole per stirpes that I mentioned earlier is set up in place and things like that. So here's the story. Okay. So my grandmother, as much like your mom, we had taken her keys away. Fortunately, I was not the one that had to take them away. It was my dad. He got the fun job of doing that. And we used the term, well, and he told her, he said, well, Mom, you had that accident, and I don't think the insurance company is going to allow you to drive anymore. He's trying to blame it on the insurance company, because he and I had that conversation, and I said, well, let's use this. Let's try this and see if this works.
That's a good move.
Yeah. Well, we tried the insurance company, and lo and behold, what we found out is she called around other insurance companies, and she found someone that would write her. So,
oh, geez.
So that didn't work. So now we were back to basically, okay, you're going to have to take the keys away. Well, lo and behold, very shortly after that, she had a minor stroke and was seeing double. So she took her own keys away at that point. and moved into an assisted living. Okay, so she was in the assisted living for about 1.5 years before this happened, and this is where the story picks up. So it's Monday morning. I get a phone call. Your grandmother's gone to the emergency room. She's having, some challenges, and so we get to the emergency room, and what we realize, and she was in her 90s. Okay, so what we realize is she's very likely not going to come home from the hospital as this progresses throughout whatever amount of time she has remaining. And so we call, my aunt, fortunately, who lives in another state, was here visiting. So she was there. My father was there. My mom comes, me, my siblings, we're all kind of there in the emergency room. Well, so the hospital was amazing. They did exactly what they should have. They got us up to a room where we could visit with her and be there as a family, And so this was on a Monday. So what happened is Tuesday, Wednesday, Thursday, everybody was kind of there. We just all kind of hanging out, telling stories, reminiscing, having, quite honestly, very good family time, And so, a couple people would stay with her one night, and she was physically in the room, not necessarily, basically asleep this whole period of time.
Sure.
And so Friday comes around. So let me jump back to Thursday. So Thursday night, my parents had decided they were going to go home that night. I was going to stay with my grandmother, with my aunt, and so we're staying with her. Mom and Dad had gone home. Friday morning rolls around. We had a call very early from my mom that said, "Hey, your dad woke up and was not feeling well. Had a real bad stomach pain. I'm taking him to the emergency room." And we're like, "Oh my gosh, okay, wow. Well, let us know, And the emergency room that they were going to was not the same hospital, just because of distance, that we were at. So we're on one part of town, they're in this other part of town. And so, we're kind of checking in. My sisters are, where they're trying to say, well, where do I go? And so turns out my dad had emergency surgery to take care of something. And he was going to have surgery at like 9:30. Okay, so he's in surgery. Well, what happens is about 10 o'clock, my grandmother passes away. And, while he's basically in surgery. And so then this is his mom, And so I sign all the paperwork that I need to, that's the appropriate paperwork to, do what we need to at the hospital and so on and so forth. And so my aunt and I leave that hospital and go to the other hospital where my dad is now out of surgery. And, we're going to all go be a family at that hospital. And so we had a conversation with my mom. We said, do you want to tell... I guess actually, let me take a step back. Dad was going into surgery. He had not gone back yet because we had the conversation with my mom. Do you want to tell Dad that Grandma passed away? And Mom said, no, I'll just tell him when we get back. He's going into surgery, everything like that. I said, okay, fine. And that logically made sense, And so, anyway, we get over to the hospital and Dad's out of surgery. He's in recovery, but the doctor came out. Things went good. It's going to be a long recovery. It's going to be this and this and this. We're preparing as a family, and it's we had just gone through this week of spending time together, but at the same time it was kind of difficult because my grandmother passed away just a handful of hours earlier.
Yeah.
So we're getting kind of into the afternoon a little bit, and anyway, we hear all the sounds of the hospital and the all the things going on. And this lady comes up and she says, Sumpter family. We're like, yeah. And she says, I need you to come with me right away. Your dad is having an issue with his heart. I'm like, wow, okay. So we go back, and they basically, his heart had stopped while he was in recovery. They got it back. we, said hello to him, so on and so forth, and then kind of all went back to the waiting room. And about 10 minutes later, the lady comes back and she says, "I'm so sorry. He had the heart issue again and he passed away."
Wow. Wow.
And you talk about, I'm talking from 10 a.m. till 4:22 p.m. the same day.
Yeah. Wow.
And what's interesting about that, and I said, well, Dad never knew that Grandma passed away, and Grandma never knew that Dad passed away. Boy, that's going to be an interesting meeting, isn't it?
Yeah.
I said,
"What are you doing here?"
I said, one of them's going to look at him and go, "Well, what are you doing here?" And the other one's going to look and say, "Well, what are you doing here?" And so it's kind of one of those things where we, it happened. And as and so I'm now several hours later signing the paperwork for my dad at a different hospital, literally on the same day. So let me bring this back to estate planning just a second. The whole topic of what that story is.
Right.
What we had set up, and this is the importance. I work with a lot of multiple generations. And I tell people all the time, I probably know more about your family from a financial standpoint than you do. Because what happens is I'm doing comprehensive planning for one generation, comprehensive planning for the next generation, and in many cases, comprehensive planning for the next generation. I know where all the rocks are, and I know what's supposed to happen because I know that the T's have been crossed and the I's have been dotted. And this is the importance of it. When my grandmother passed away, her assets, the way that we had them structured, flow to my dad.
Right.
But now my dad's gone. So now what happens? Okay, part of the assets that he inherited through beneficiary designation, see, he never had the opportunity to make his own beneficiary designation. So now what happens is his will comes into play. So you've got to make sure that his will is appropriate for multiple cases. And so that is the importance of making sure that it's more than just a will. Because you can have all the pieces in place exactly as you want them, but if this little nuance happens, then what? And I'll be candid. Everything went exactly as my grandmother wanted, and everything went exactly as my dad had wanted. And so at the end of the day, after several months of things and, planning and so on and so forth, I was like, and I kind of took a step back and looked at it, and I was like, wow, okay, that worked like we designed it,
Right.
And you don't think about that type of stuff. My wife Jennifer and I were talking about this the other day. She said, "Well, what happens if a husband and wife pass away together? If there's some sort of an accident, you can't determine who passes away, and then it goes to state law, and like in Alabama, the male passes away first. So now his assets go to here, and then these assets go to here, and it starts flowing down the line. So when we're talking about estate planning, when we're talking about insurance, when we're talking about beneficiaries and ownership, there's a reason that we're looking at all of these things, because we do have to think of the what ifs. If I think back to my very first question, you asked me, well, what if they had not had that policy in place? What if they had done this and that? And again, but to your point, you can what if all day long. But sometimes you keep it simple, and sometimes the most simple estate plans are the best estate plans.
Sure.
You just got to make sure that the T's are crossed and the I's are dotted, and all along the way. And exactly what you want to have happen is what happens. So, I've been kind of sitting on these stories, waiting for the appropriate time. Quite honestly, the reason I did it now is because the month that this happened was actually 2 weeks ago. And so we'd kind of just gone through a sort of an anniversary of this whole event happening. But I look back, 6, 7 years later, and think, did everything go as my grandmother had wanted, as my dad had wanted, as my clients had wanted in these other 2 cases? Well, yeah, it did. And so it sort of, it makes me as an advisor make sure and ask those questions again. So I guess the thing I'll say is if you're estate planner, if your accountant, if your advisor is asking you multiple questions, you think, why are they asking me all this? There's actually a reason. And so because we want to make sure that exactly what happens is what happens. So
you try to plan for everything, be prepared for.
You have to.
I mean, who would have thought that your grandmother and your dad would go on the same day? I mean, come on.
Yeah.
What are the odds?
Yeah. Come on. Yeah.
You know? So.
Yeah. In a situation where 2 very unrelated events, so you've heard of, if there's a car accident, if there's some sort of a crash, if there's a fire or something, you've heard of those types of stories.
Right.
Here was 2 very totally unrelated events that this happened on the same day, hours apart. And that's the only time in my career that's ever happened. It's
amazing.
Yeah.
Jim, just 3 good scenarios that you described. I mean,
Yeah.
really, and when I say good, I mean it really makes you think about everything.
Yeah.
And that's important. Throwing something out there and having people go, huh, I never thought of that.
Yeah. Well, and RJ, these are puzzle pieces. Because see, this doesn't have to do anything to do with your 401k or your investments or your return.
Sure.
Or your cash flow or your income taxes. These are pieces of the puzzle that a lot of times we don't even think about.
You're right. You're right. Okay. All right. Well, Jim, how can people contact you?
Yeah. So, a few ways. My direct number is 205-510-9074, phone or text on that. Our website is www.cmcfp.com. And then also all the social media. We have contact information there on Facebook, LinkedIn, and Instagram. And then also follow us on YouTube.
Sounds good, Jim. Thank you very much. And most importantly, thank you for listening to the Financial Puzzle Playbook podcast. We ask you to share this podcast, rate it, and leave a review because this actually helps others find the show. Again, thank you for listening and for everyone at the Financial Puzzle Playbook. I'm RJ Malik, and we'll see you at the next podcast.
Thank you for listening to the Financial Puzzle Playbook. Click the follow button to be notified when new episodes become available. Don't forget to follow us on social media by checking the links in the description. And contact us today by visiting our website at www.cmcfp.com or give us a call at 205-510-9074. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security, or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of CMC Financial. It does not necessarily represent those of RFG Advisory, Private Client Services, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by CMC Financial or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives of Private Client Services, member FINRA SIPC. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Private Client Services, CMC Financial, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.